Hi folks, Scott here, and this is the wrap for Friday, August 30th. So, sort of a quiet day after the initial selling this morning, but before I get to that, let's talk about what, I was getting ready to say Monday, but what Tuesday may bring us. Monday is Labor Day holiday, so the markets will be closed. Electronic session may be open for a couple hours. I don't remember because I don't normally trade on holidays, but anyhow, let me show you the results of fading gaps on the first trading day of a month, when above the 200-day moving average, closing below the 10-day moving average, and closing down. So below the 10, above the 200, and closing down. See, the blue line was yesterday's close, and today we closed down about 4 points. And specifically, again, trading the first trading day of a month. And there you go. So out of 21 similar scenarios of the past 10 years, only 2 gap down. Very unusual. Odds greatly favor a gap up, as you can tell. Now, you don't want to bet the farm, but still, that's awfully lopsided. Here, we talked about this at length actually today, and even this morning I was talking about how getting positioned to the long side for any aggressive traders, probably not a bad idea, especially option traders. You know, I don't know that I want to take futures risk over the weekend with the Syrian events, but I do believe the Syrian fears probably exacerbated some of the downward pressure. It probably sets up a bounce as soon as whatever's going to happen happens. Anyhow, using an end of the day stop, it's been a big money loser as well because you often get trend days in the first trading day of the month. So clear odds for getting long. I know some folks have done that using the data we talked about in our trading room, and this just further shows it as well. All right, but here's fingers crossed and prayers, right, that we don't have anything major happen in the Middle East. And let me show you our worksheet, what we call the TGP worksheet, today's gap play worksheet, heading into today. This was posted last night around 6 p.m. Eastern Time. And you can see clearly, or we'll be able to see clearly, that odds favored shorting an up gap in the UHC zone, because we closed higher yesterday. So any gap between yesterday's highs and yesterday's close in any of the 8 indices was historically attractive based upon the average of the individual gap guides for all 8 indices in our 3 systems. So really strong numbers here. I'm looking for 60 and 1.3. You pretty much know I'm going to trade when you see numbers that strong. A little bit weak going for the extended target today, and that kept me from really riding today's trade, which I did take and was a winner, but I'll get to that in a moment. Further, up gaps last trading day of a month when below the 10, above a 200 have been attractive. Now this bias was countered by what I showed in my pre-market comments last night's video. When it's Friday, the last trading day of the month, it tends to gap down more than up. So I sort of counted that. But before I get to that, let me show you the individual guides. This was another concern. While the average looked really good, some of it was biased by these yellow zones. So this is a UHC zone between the high and the close, ES, which was above average sample sizes. Below average sample sizes. So I discounted a little bit, and it throws us so many numbers. And look at the individual ones. So just counting them, I score them. Is this a check? Yes. 60 and 1.3 check. Plus 1. YM? Nope. NASDAQ plus a half a point, the way I score it, just in my head. And then the Russell. Check. So 2.5 points out of a possible 4. Looking at the ETFs, however, whoops, wrong place. Do the gap guides ETFs. Neutral, no check. -1. It's been historically unprofitable, so now we're down to 1.5 points. Check on the Qs, 2.5 points, and then the Russell 3.5 points. And maybe you could count. This is a half a point because it wasn't bad. So basically what I wrote down was 4 points today out of 8 as I'm sizing it up. So sometimes it does pay to look more closely at the individual guides to size up the trade. So I was a little bit concerned about that, and per my comments last night, I mentioned one of those directions was not as good as the others. Well, it was the up gap that was not as good as historically under this scenario. For reasons I'm not quite sure, but just was prone to a little bit more volatility after the open. Small and mid-size up gaps on Fridays after closing and below the 10 and above a 200-day moving average. not great. Now, one of the things I stumbled on was, what about using a 3-point stop? That showed good numbers. So I sized up as guides are neutral to slightly attractive for today for up gaps, and overall neutral factors for fading up gaps. And as long as we had at least a 1-point opportunity, I would fade it with a half-size position. But if it opened less than 1640, I would use a 3-point stop. And the reason for that is, let me pull up my futures chart from my other trading workspace. Don't worry about the colors, just something I've been experimenting with. And the thought was, if you look down here, you can see the time. This is Eastern time. The thought was anything less than 40 would result in a 5-point stoppage, where our guide showed being below the Globex highs. So I just felt like it was more in harm's way. Secondly, the data I just showed you was really good for 3-point stops. So if we were below 40, 3-point stop would be sufficient. If we were above 40, then I'd have a bigger payoff if it worked, and my stop, importantly, would be above Globex highs. So it made sense to use a 5-point stop. That was my thinking. I don't normally qualify these setups with different size stops, but today it made sense to do so, and that's what it did. And I said I would not fade a gap down. So I went long at the open. Whoops. There's my busy trading charts. Long at the open in the ES. Got filled at 1390. Probably can't tell the open. I think it was 1390 and a quarter. I got filled at 1390. First target was 1639. First target was 1637, one tick above the prior close. And then I decided, since the extent target wasn't clearly favored, I wasn't going to go intentionally for the target, but I thought we could hold till 1636. Sorry about that. 1636, which was the 4 p.m. close. If you go check your cursor and see where we closed at 4 p.m. yesterday, that's where the ETFs were, and they were at 1635.75. It went down there, missed me by a tick, bounced around a little bit. I decided I wasn't going to get greedy because too quickly could it bounce. I had some data showing possible weakness or strength later in the morning before it rolled over, and went in, closes out for plus 2.5 in the second half at 36.50. Of course, as soon as I closed it out, it went ahead and tanked. Some of our members really rode this well. I was not one of them today, but plus 2.25 points roughly on average. It was actually a little bit less. Did no other trades. The range trades didn't favor anything. We did have a trend line break here. I was at a team or company meeting working on development stuff, and got back to the office when the charts were over here around 1628. Much of our members are already short because I showed a bunch of data that favored weakness into the close today, and that was dead on. And I got here late, went short at 28.50 with a 2-point stop, got plus 2.5, and then got stopped for minus 1.25 points for a tiny win. So we actually, the historical data clearly showed a bias to rallying the last 15 minutes of the futures. I guess probably anticipation of a gap up on the first trading day of the month. But anyhow, it was a good day. 2 for 2. Even that's a little bit of a stretch. It was a tiny winner, but it was a good week too. So that was my day, and hope you have a great long weekend. And that is the wrap for Friday, August 30th. Have a good one.